right here with an expand high, expand low. And the basis for the most recent volatility report, the Aussie franc, is that we had a box form at the high of the range after taking out the expand high point. So this happens to be a daily chart, but you can also apply this to some of your smaller time frames as well. It doesn't necessarily guarantee that it's going to go short, but it's certainly a higher probability area if you wanted to test a short trade. And the actual behavior that we're seeing of a rejection off of the most recent expansion line, gives us a little bit more probability even on top of that. So as far as, you wouldn't be entering so much on the daily, you'd find an entry on your smaller time frame that kind of coincides with some of these levels in here. But so that is the basis for why this recommendation was short, just higher probability area to enter into a trade.
Hey, Shane, so where would based on the origination point of the previous multi-leg expansion forming, where would they expect, if the market does hold short, where would they expect that to eventually travel to, just initially?
Yeah, okay. So kind of the way that when you're, for practical reasons, when you're actually trading based on, the master pattern, there's a few different things that it can run into. One, price could finally settle. That picture, it ended up going into an expand low and then taking off from there. But sometimes, as we've covered a few, on the webinar before, sometimes it'll come down and just bounce off of the origination point before it ever does the expand low or expand high, which is basically would be this level going down the middle of the range. So in this case, this was the origination point, and notice we had a big run up, and then we formed an origination point. That lets you know right out of the gate that price is probably going to be whipping back and forth. So we formed that origination point. That would be our first target where we're looking for, to see what'll happen, more or less. We don't want to get too excited and see it come down to here. And then, if it has a bounce right off of that level, which it very well could, starts coming back up, then we'll want to, maybe reevaluate, maybe close the trade. It could bounce off of it for a second, then continue pushing through. So kind of the stair-step approach to managing your profit, if you are in a trade like that, would be see what happens right here, and then see what happens as it gets down through some of these expansion lines. We'll want to pay close attention to this one. It's the lowest expansion line inside of this range. And then we'd be wanting to see it come down through, and the next expand low point would be right here. So we had expand high, expand low, expand high. So we never got quite through, actually, I'm sorry, this level right here. So basically these liquidity lines that we've got right here. And this one was pretty straightforward. And very similar to Aussie franc. We had a range that was formed. Here was our master pattern: expand high, expand low, came up, didn't quite hit the expand low, but we did rotate off of a expansion line, expand low, ended up rotating off of the lowest expansion in the range to come up for our expand high, and then come down, formed a box that was at the high of the range, and then rotate off of the highest box in the range back down short. So those rotations on the daily chart, a lot of times those can end up running for days on end. So definitely, if you see something like that, and maybe you don't get an entry in this exact range, but somewhere down here, whatever you can do to get into one of these, those can end up being really good trades. Again, rotation off of the highest expansion in the range, those can sometimes push for days on end. So even if it has pushed a little bit, there can always still be a little bit more movement if you're able to get a good entry into it.